And let's continue the conversation with Kash Pashootan, Vice President at Raymond James Financial, joining us now live from Ottawa. And it's so hard to believe we're talking about the company that literally used to own the smartphone market. So much has changed, though.
It has, and I think one of the things we saw was significant excitement and anticipation of the new Z10 coming to market and really changing the future and being a turnaround for BlackBerry. And we've seen that just hasn't happened. The stock rallied up to $17.50 at its highs, stayed at $15 a share for several months, and then when we saw earnings come out, the stock plummeted. So the turnaround token per se that the Z10 was to be has failed, and I think that the company announcing that it's potentially looking at going private or selling to a competitor is evidence of that. Side note,
Kash, have you tried the Z10 or the Q10?
I have, yeah, I have, and I think that one of the advantages of BlackBerry is their keyboard, and really they're I think the leader still in the space of the keyboard, and unfortunately the system just came out too late. So for myself personally, I switched to an iPhone, but I think they are doing a lot of things right. Don't get me wrong, the company, when you break it up and look at its value, the stock's trading at about $10 today after running up 10%, but $6 of those $10 are just cash that company has on its balance sheet. And the remaining $4, you could argue some of it is the fact that they're still generating cash flow. Two, the U.S. Department of National Defense says that BlackBerry still has the most secure platform. So the company has value. I don't think the game is over for them, but the main point here is that the turnaround of the Z10 was to bring forth for BlackBerry. It just hasn't come to fruition.
Who do you think might be interested in buying out BlackBerry?
Well, it's difficult to speculate, but I think that the other factor you want to look at is, will a competitor buy them or will they go private? And both have their pros and cons. The most lucrative route would be for this company to go private, really turn itself around, and then eventually sell to a competitor. As mentioned before, the advantage of the company being private is that they're not under the microscope of the public markets. They don't have the stress or the pressure of reporting earnings on a quarterly basis, quarter to quarter, and having the market punish the stock price. So they could really get in there, focus on turning the company around, and when they're ready to sort of unveil what they have changed, they can eventually take it public or sell it to a competitor.
So if you were advising the company right now, that would be the step that you would advise them to take at this point?
Well, it depends on what someone is willing to pay. If I'm a large shareholder of BlackBerry, which I'm not, as a portfolio manager, we don't own that position. But if I was, I would want to see my shareholders receive sort of the most amount of capital that they could for the shares. And if going private offered the opportunity for clients to receive less than a competitor, the premium that a competitor was offering, I'd say going public is the best way to go. So really it comes down to what someone is willing to pay. I think what is interesting is the largest shareholder of BlackBerry, Prem Watsa, has stepped down from the board, and so that would signal that potentially Fairfax, which he is CEO of, is potentially interested in making a play here at BlackBerry.
Fair enough. Kash Pashootan, Vice President of Raymond James Financial, joining us from Ottawa. Appreciate your insight.
Good to be here.